defining what a REIT is, and I mentioned that a REIT is an acronym for Real Estate Investment Trust. And the first definition I like to give is that a REIT is a regulated entity that pools capital from many investors to acquire or invest in a diversified portfolio of real estate investments and a professional management. So REITs are not subject to corporate income taxes on the distributed income bit. And a REIT distributes at least 80% of its annual ordinary taxable income to investors. So another simpler definition is that REITs are regulated collective investment vehicles that allow investors to pool funds for acquisition of units in a trust with the intention of earning income from real estate without directly owning the property. And I'll explain a bit later why that is the case. The third definition is REITs in Kenya are an unincorporated trust registered at the Ministry of Lands and Physical Planning. So that means REITs are not corporate entities or companies, and therefore cannot legally own the real estate assets they invest in. So the ownership lies with the trustee who acts on behalf of the REIT investors. So a REIT basic structure, if you look at the right side of your screen, the right bottom, so you can start from there. So investors invest into their money into the REITs. So once you put your money into a particular REIT, in our case, say, for instance, Acorn Student Accommodation Income REIT, the Acorn Student Accommodation REIT then in turn invests into income generating real estate. Again, in our case, that is equal to student residences, the ones which are complete, up and running and fully occupied. Then once the income generating real estate gets an income from rental income, that money is paid into the REIT. So tenants pay, or those properties pay the rent into the REIT. And then after deducting the operational expenses, REITs distribute dividends to its investors. So a more detailed structure is what I now have on the screen. I think this is where we've gotten to. So if you start with the unit holders at the top, so unit holders will invest into the REIT. So you buy, for instance, 10 units of Acorn Student Accommodation REITs, you put in your 220 shillings, that money is put into the REIT. The REIT then buys a unit, or the 10 units you've sort of ordered in properties, in our case, to student residences. Then the net property income, this is rental income, is paid into the REIT, and then in turn the REIT distributes dividends or distribution to unit holders. Like I mentioned, you have a few other actors who are spread all over that diagram. So you have a trustee, and what is the role of a trustee? The trustee acts on behalf of the unit holders, and these are all the investors who put their money into the REITs. And in turn, the trustee earns a fee. Okay, I'll mention who a trustee is. So on the left, you have the REIT manager, who literally manages the REIT or that offers management services in the REIT. And the REIT manager also appoints a property manager who gives a service to the REIT in terms of property management services. And the primary role of the property manager is, one, to ensure that properties are well maintained, and two, properties have the right level of occupancy. And the reason for that is obviously because then rent is paid, the rental income is sort of raised from occupancy. So generally, you have a few other actors. You may have a sponsor, and a sponsor means a sponsor is a significant holder of units, or a large shareholder, or a large unit holder in the REITs. In our case, Acorn Holdings is a sponsor in the Acorn REITs, and what that primarily means is that they have invested a significant chunk of their capital in the income REITs. So what are the types of REITs in Kenya? So the first one is development REIT, and what the development REIT does is it simply pools investor funds together for the purposes of development of real estate projects. So development entails buying of a piece of land where those properties are going to be developed, and then developing or building the property itself, and then stabilizing that property, meaning that you get initial occupancy, you market the property, get tenants on board, and then once you hit 80%, that property then can be sold into the income REIT, or it can be sold in the market. And then we can look at what is an income REIT. So a REIT, this is a REIT that primarily derives its revenues from rental properties. So investors gain through rental income and capital appreciation from the investments taken. So the people who invest in income REITs expect to get a return from rent. The ones who invest in development REITs expect to get a return once the property is sold, or once they get an exit of a property after the development is completed. So there's also Islamic REITs, and what Islamic REITs are, they are primarily Sharia compliant REITs, and most Islamic REITs are income REITs. So it's a unique type of REIT that invests primarily in income producing Sharia compliant real estate. So a fund manager is required to conduct a compliance test before investing in real estate to ensure that it is Sharia compliant and that non-permissible activities are not conducted in the real estate. And if so, then that is happening on a minimal basis. Right. So I'd like to quickly go through evolution of REITs. So REITs were first established in 1960 by the US Congress to give all investors, especially small ones, access to income producing real estate. And the reason is obviously a building or deploying real estate, investment into real estate is a heavily capital intensive activity. And previously this meant that only those people who had deep pockets or people who are wealthy could afford to do real estate development up until this point. But then the US Congress realized that the majority of people who are producing income, allow me a minute, I need to allow a few more people, admit more people into the webinar. Okay, thank you. So then in 1960, this was launched in the US. So for the first time, REITs brought benefits of commercial real estate investment to regular Americans, benefits that were previously available only through large financial intermediaries and to wealthy individuals, like I mentioned. So other countries followed suit, with Australia listing the first property trust in 1971, Canada 1993, in UK, REITs were established in 2007, and that's why a lot of us have not heard of REITs, okay? In Africa, the first country that established REITs was Ghana. This was in 1994, and that has gained traction globally, and today the market capitalization for REITs stands in excess of $2 trillion. So since 2013, 7 other countries, including Kenya, South Africa, Saudi Arabia, India, Vietnam, Bahrain, and Ireland have established REITs market in their respective jurisdictions. So which REITs are trading on the Nairobi Securities Exchange? So you have 3 REITs which are trading in the NSE. So you have Ilam Fahari REITs. This was the first REIT to be rolled out in Kenya. Then you have 2 Acorn REITs, the Acorn Development REIT and the Acorn Income REIT. This were launched in February of 2021. And who are the licensed CMA licensed REIT managers? Because when you talk about licensing, there's various aspects of licensing. That the REIT itself has to be licensed as a REIT by Capital Markets Authority. The REIT manager or the fund manager has to be licensed and approved by the Capital Markets Authority. And finally, if any aggregators, like in our case, VUCA, that also has to be licensed by the Capital Markets Authority. So we have a few REIT managers in the market. I'll mention them. So Acorn Investment Management Acorn Investment Management Limited is a licensed REIT manager. You have Stanlib Limited, Nabo Capital, ICA, Lion Asset Managers, and these are the current REIT managers of Ilam Fahari REIT. You have Fusion Investment Management Limited, Housing Finance Development and Investment Limited, Starling REIT Asset Management Limited, Britam Asset Managers Limited, CIC Asset Managers Management Limited, among others. And so I keep mentioning the NSE unquoted securities platform, and you will hear a bit of that as we go along. So what is the NSE USP, or the unquoted securities platform? So the unquoted securities platform is an automated solution for issuance and trading of securities of unquoted companies. The platform offers world-class trading infrastructure and information services, as well as enables companies access capital markets for long-term funding through private placements and restricted offers. So the Acorn Development REIT and the Acorn Income REIT are trading there. So on the NSE USP. And what are the benefits of having your REITs trading on the USP? Obviously, it's a convenient route to transfer unquoted securities. It increases liquidity. So a lot of investors who get into REITs and other equity instruments want to know how quickly can I get my money if I got an emergency? If I'm looking to invest for this period of time, but I require my money, how quickly can I get that? So that is liquidity. So the USP offers liquidity. It also offers entry and exit for investors. Those who want to gain some exposure in real estate through REITs have an easy entry, and they also have an easy exit should they want to sell their investment. Right. So it also offers increased transparency for investors, and the reason for that is there's many more players involved when you trade anything on the NSE. So you have the NSE itself, you have Capital Markets Authority, you have a registrar in place who sort of handles the settlement bid. You also have many other players, including media. And this therefore offers transparency. And the other one is obviously it avoids settlement delays as the funds are held by custodian bank who determines how quickly the funds are available. So this removes the sponsor or the primary player from the place and then offers the investors the ability to then quickly recoup the investment if they want to sell it or gain more exposure if they wanted to buy. So it also allows surveillance by exchange, the regulator, and therefore reporting by players is easy. So the information you'll see in the public domain is pretty much what you will get from ACON. It's also the same that you'll get from NSE, Capital Markets Authority. So it allows surveillance. And the register of investors, and that is very important, is maintained by an independent registrar. Hence, there's no chance of manipulation. Right, so what are the benefits of REITs? So the first one is obviously consistent income, and this is because REITs are required by law to pay out at least 80% of their income to unit holders in form of dividends. In the case of ACON student accommodation income REITs, we pay dividends twice a year. So the interim dividend, which is paid at half year, and the final dividend, which is paid after the audited results are announced every year. So consequently, they generate a stable and consistent income stream for investors. So there's various investors who will always also want to when they look at investment, they want to figure out, does it give me some cash flows, especially for those people who are looking for retirement or for institutional investors who want to show a consistent return over a period of time. So the other one is diversification, and the importance of this is, if you look at the Kenyan psyche, the Kenyan society, we love real estate, but a lot of us do not have a way to, first of all, get into real estate profitably because of the large capital outlay required. So REITs offer diversification opportunity, especially when combined with other securities. So you're looking at, say, fixed income securities, you have stocks, and all which have different long-term investment characteristics. You can also probably diversify using money markets, and a lot of people have done that for those people who want to get exposure in for instance, fixed income securities over a short period of time. So what REITs offers is an additional security which investors can get into, gain exposure into real estate, which is profitable and regulated, and also they are able to invest in the long term without requiring a huge capital outlay. So the third one is transparency. So investors are able to understand exactly what they're invested in terms of their actual assets. So if a REIT has 2 properties or 3 properties, you know their exact valuation, you know where they are, you know how much income they're generating, what their occupancy is. So it's an actual physical asset. The costs and returns are also quite transparent. So capital appreciation, a lot of investors get into investment, obviously, with a view of getting some return in the short and medium term, but in the long term also getting capital appreciation so that they're protected from inflation, and also so that by the time they're exiting that investment, then they're covered not just for inflation, but they've made some money out of it. So when a REIT holds real estate that is in high demand, for instance, the Kwetu student residences, the regular rent escalations means that the value of the investors' units will grow in value as the rents appreciate over years. So there's capital protection. So REITs I dare say that REITs are the only asset-backed income-generating assets that we have in the market. So REITs are backed by income-generating properties, which offer regular return to the investor. This gives comfort to the client in terms of capital appreciation and protection, so that whatever it is that you invested in, every time an investor goes out and invests, when you invest in REITs, you know there's actual assets behind the REITs, and therefore there's no chance that then the value of whatever it is that you invested will go down in the short or medium term or even long term. So tax exemption, again, this is very important when you're looking to invest. Every time you invest in whatever whatever asset class you invest in, you'll always have to stop and think how much of my return goes into taxes. So this is a very important question, especially when you've already paid income taxes and then put your savings into an investment. You want to know that you're not then continuing to you get into tax efficient investment vehicles like REITs. And REITs are tax exempt, so they're exempt from corporate taxes. There's also no capital gain tax on REITs. There's no stamp duty tax because this is a indirect real estate investment. And the only taxes which are accrued is 5% withholding tax on dividends payable to investors. And you can compare that with other investment classes or other, collective investment schemes. So liquidity, REITs allow investors to buy units rather than entire asset, and it is easier to sell these units wholly or partially. I mentioned this, and it's a very important point. So if you are, for instance, looking to buy a 3-bedroom house in say, Syokimau in Nairobi, and you're probably willing to spend up to 20 million shillings, it means that you have to raise the entire 20 million shillings, or you probably have to get financing for you to get that real estate property. Right. So for REITs, you do not have to buy the entire property. You just buy a unit or a share of a property. So that allows you to quickly get into it, and also allows you liquidity when you want to sell that particular unit. You do not have to take the entire property to the market. You just need to go to the capital markets, or rather Nairobi Securities Exchange in our case, and sell your units. And other investors who are looking to get on board would buy those units, and you quickly get your liquidity. So they are quite tradable, and that makes it easier for you to get liquidity at the point you want to exit. The final one, which I like talking about, is professional management. Why this is important is access to professional teams of investment management, property management, development management, to handle acquisition management, acquisition, property development management, the whole property management aspect. Then that means that you get more out of your investment. A lot of times when people get into real estate, they struggle because they build. Yes, they will build. You'll get fundis, you'll get an architect, you'll get a contractor to put up the property. But then you also have to think about occupancy. Where do you get the tenants? And once you have occupancy, you have to think about collecting rent every month. So how do you do that? Do you do that directly and you already have a day job, or do you do that through somebody else? And therefore professional management is very important. Again, the whole essence of professional management is you have up-to-date research, you have people handling the legal aspects of that property, you have people handling maintenance. Again, very, very important, especially if you're doing commercial properties. So what are some of the risks of investing in REITs? And I like speaking about this, especially, of course, with a lot of context to it. So the first one is occupancy.
Sorry, the last slides are not visible.
Right. So I think somebody has taken over the screen. Let me know.
Also, Don, if you can add in some guys, there are somehow in the waiting.
Okay.
Okay, Donald, it seems like I am now the admin. That's the problem.
Okay.
It seems there's no, so I have admitted people, yes, but it seems I'm trying to make, okay.
Are you able to see my screen?
Donald.
Agatha?
Yes.
Just go there on the share screen button, and then just do multiple screens.
Okay, Donald, you're back to admin. You can continue the presentation. And to the participants, kindly mute yourself because there's a lot of noise, so a lot of us cannot hear what is going on.
Right, right. Can you see my screen now, Agatha?
No, like
No.
I can't see your presentation.
Okay.
Oh, Dennis Mutuma, can you hear me?
Yes, I can.
Please give that instruction again to Donald, because otherwise, if he doesn't, we are going to have this problem over and over again.
Okay, the instruction for the host?
Yes, because it seems we can only have one host, but multiple people can share a screen. So he is the host, so he has to. Donald, I think you can go to screen, because when I try to, I'm told that host disabled participant screen sharing. So allow multiple screen sharing.
But I think as of now, we're good because his presentation is back.
Okay, let's continue.
I hope there is no one else on the waiting room.
Right. Should I continue?
Yes.
Sure, Don.
Okay. Right. So I'd started addressing the risk of REITs. I said the first one there's different types of risk for different REITs. Primarily for the income REIT, the primary risk is occupancy, meaning that depending on what asset class you get into, then you have to think about occupancy, because that is what that is where rent comes from, and then rent is is what is aggregated to pay dividends. So when you get into income REITs and when you're looking at REITs generally, you always have to ask yourself in what segments, in what particular sub-asset classes do these REITs invest in? If you look at, for instance, Econ REITs, they've invested in purpose-built student accommodation, and the reason for that is there's very high demand for it, and I'll talk about that as we go along. There's extremely high demand for it, and in terms of occupancy, that's not a problem because the properties are appropriately placed right next to universities, and the brand itself is very strong. So there's other REITs which do, for instance, commercial properties. They're also attractive, but you also have to think about what risks come, for instance, with investment in commercial properties. What risks are involved, for instance, when somebody does a REIT that invests in residential properties? So occupancy is the largest risk that we look at in the income REIT. So whatever it is that the property managers, whatever activities they carry out, is to ensure that the properties have the right level of occupancy at any given time. Okay, so the next one starts on the development REIT. So in the development REIT, project delays can be a risk, and the reason is when a project kicks off, there's various approvals required. For instance, statutory approvals required from local governments to national governments to various entities and bodies which are constituted by the national government. So roughly, there's usually about 13 to 14 approvals required before a project can kick off. So it's very important when you're investing in development REITs, then to understand what pre-development plan or contingencies has the sponsor or the REIT itself put in place to ensure that the property does not delay. In the case of Econ development properties, the first 6 months is usually spent exclusively getting statutory approvals, because we've seen that's an area where a lot of developers fail, where you start a project because you have 1 or 2 approvals, then the project approval takes forever, and therefore you delay in the project. The other one is around land issues, where people get into litigation because of land issues, and that therefore delays the property, where you have multiple titles and so on and so forth. And obviously, this is a risk which is properly understood by institutional investors, who are the ones that predominantly invest in development REITs. The other one is economic and political instability. This touches across all investments, even if you have a kiosk and there's economic or political instability, or there's an environment of fear like we do currently during elections, then that can lead to either a closure of properties or sites, or decrease occupancy in the various properties, or even decrease the amount of work going on in those properties. So the other one is specifically for development REIT, where if you have a limited pool of investors. A development REIT is limited to institutional investors. So primarily, those are the people who can meet the thresholds that are required to invest in the REITs, and also have the understanding and the complexity of development REITs. So that can be a risk, where there's fewer investors compared to income REITs, where you have many retail investors. So who are the REIT advisors? I mentioned that we have a trustee in the REIT. You must have a trustee. In our case, the trustee is Cooperative Bank. The transaction advisor is Renaissance Capital. The legal advisors on the income REIT is Dowling WLG. On the development REIT is Triple OK Law Advocates. And the next one, which is very important, is the auditor and reporting accountant. So on the development REIT is PricewaterhouseCoopers, or PwC. On the income REIT side is Deloitte, and that has to be kept separate. And the reason is both REITs are entities on their own, and they have to have separate auditors. The tax advisors is Viva Africa Consulting. You have different valuers. So on the development REIT, you have Tyson's. On the income REIT, you have Knight Frank. The registrar, I mentioned about the registrar because of the settlement process, and also the register of investors. This is CDSC. The structural engineer is FBW. On the development REIT, that is not a requirement. And then the project certifier on the development REIT side is ADS, or Aegis Development Solution Limited. So the most important ones that you need to think about as an investor is a trustee. Who's a trustee and what the responsibilities of a trustee are. You also need to think about the auditor and the reporting accountant. And the reason for that is the auditor is involved, one, during the buying process by determining the value of a property and auditing that process. They're also required to do to do annual audits for the financials in the two REITs. You also have valuers, very, very important. During the sell down period, for instance, the development REIT has developed a property and the income REITs would like to buy that property. The two valuers have to be separate. So Knight Frank has to do a valuation of those properties which are being bought by the income REIT, and Tyson has to do a valuation of the properties being sold. So that is very, very important to keep that separate. So which are the operational properties in the income REITs? So we started off with 3 properties in the income REITs. That is Kwetu Wilson View. This is the one right next to Strathmore. There's Kwetu Ruaraka. This is the beginning of Outer Ring Road, and Kwetu Jogoo Road. So we have since added a new property, Kwetu Parklands, to bring the properties to 4. And the whole reason is you have to keep adding properties to the income REIT, not just to increase the value of a REIT, but also to give an exit to the development REIT and increase the dividends, the potential of dividends which are paid to the income REIT unit holders. So they always say the best time to get into REITs is early, when properties are few, because as you go along, you keep adding properties and the net asset value goes up. And when the net asset value goes up, it means that your investment is appreciating in terms of capital. Then you have a few other properties which are in the development REIT. You have Kwetu Aberdare Heights. This is the first property we put up at USIU. We have since put up a second property right opposite it, the Kwetu USIU. And we rolled in February 15 this year, we rolled out a property next to Daystar, rather next to the Total petrol station, which is near Daystar. It's called Kwetu Hurlingham. That property was rolled out on 15th of February. It has touched an occupancy of 75% in those few months. There's a few other properties which are under development in the development REIT. So there's Kwetu Chiromo and Kijani Chiromo. This is right next to the University of Nairobi on the bridge which connects the Dusit side to the Nairobi University, or right next to what was the Australian Embassy. We are putting up a 2,000 bed property over there. You also have Kwetu Catholic University, Kwetu Kuea. So we have Kwetu and Kijani Kuea. So Kwetu has been a premium or flagship brand currently, in the purpose-built student accommodation. So we have since rolled out an affordable brand called Kijani. This is going to be slightly affordable than Kwetu is. So what are the similarities and differences between REITs and money market funds? Because when I'm talking about REITs, I like talking about, I like starting from a point of known to unknown. So money market funds are, largely known in the market. So the similarities is that both are regulated, both involve pooling of funds from many investors. Both have visible or existing assets. In the case of REITs, this is properties. In the case of money markets, those will be government bonds. Both have income generating assets. Like I mentioned, in the case of money market funds, that will be fixed income securities. In the case of REITs, that is properties which are income generating. Both are managed by a fund manager. And in the case of REITs, the fund manager is called a REIT manager. Both are structured where you have a trustee, a custodian, a fund or REIT manager for compliance, and also to ensure that there's governance to protect the investor's interests. And both are transparent. So what the differences are: income REITs invest in real estate assets with rental income. Income REITs are required by law to distribute at least 80% of their income to investors. In REITs, the unit price grows due to capital gains. So that's not the case with, say, the money market funds. And REITs are traded in the Nairobi Securities Exchange, USP. So once should you require your money or you want an exit, it's as simple as selling your units on the USP. And then REITs are medium to long-term investments, while money market funds are short-term investments. So short-term investments would mean that if you're investing for, a few months to 1 year, so that is considered short-term. But while REITs are medium-term to long-term, meaning that 3 years to 5 to 10 years, and that's when you really get your return, right? So what I'd like to probably run you through the performance of the Aecon Student Accommodation REITs 2021 performance, which is audited financials. So the operating revenue was 342 million. The total profit was 350 million. The net asset value, which is the valuation of a property before distribution, is 3.5 billion. And therefore the net asset value per unit, or the price of each unit, moved from 20 shillings at launch in February last year to 20.8 at close of last year. So the full year distribution per unit was 1 shilling 0.02, and that means a dividend yield of 5.4%. And then if you look at the capital gain from 20 to 20.8, that's a capital gain of 4%, meaning a total return of 9.4%. So on the development REIT, the operating income was 1.1 billion. The profit was 750 million, and therefore the valuation of the properties under development is 5.2 billion. And development REIT does not pay dividends in the first 3 years, so that is on track. Meaning 2021, there's no dividend paid, and therefore you'll see the net asset value per unit, or the unit price, jumped from 20 shillings to 23.84 shillings. So, having shown you all that, we'd invite you to be part of our growth story. So over the years, we have achieved market leadership in the student accommodation sector through Kwetu, like I mentioned. So by 2030, we expect to add 3 times our existing bed capacity in order to satisfy merely 10% of the demand for affordable and quality student accommodation in Nairobi. So we are at the start of our growth journey. I've gotten a lot of questions when I speak to investors. When you go, yes,
Donald.
Yes.
Maybe I could stop you there for you to answer 2 questions, and then maybe get an opportunity to admit like 10 people, because my phone is okay, cool. So maybe you can answer this question. Pauline asks, do you give the investors an option to choose from investing in residential properties or commercial properties, or that is not a decision that sits with the REIT investor?
Right. So, Pauline, thank you very much for that question. So, REITs are usually formed with a purpose in mind. In our case, we formed the Aecon Student Accommodation REIT to specifically invest in student accommodation. And that's where we saw the largest opportunity, and I'll speak about that opportunity, and that's where we see growth. So we are currently not doing commercial properties, and we're also not doing residential properties. So when investors invest in Aecon REITs, they're literally investing in student accommodation.
Okay, all right. So one more question. Mwaro is asking, how strategic are the Kwetu, Ruaraka, and Jogoo Road? I don't know if you understand that question, but that's all she said. How strategic are the Kwetu, Ruaraka, and Jogoo Road? Thank
you very much for that question. So the Jogoo Road was our first property that we ever developed under the Kwetu brand, and that was followed by Ruaraka, and then eventually Parklands. How strategic? Very strategic, because of the various schools which are in that area. It was which covers not just Thika Road, but the colleges which are dotted all over that area. So now what has happened is, with time, we've also picked up key valuable lessons that investing in properties right next to the universities ensures that then the property is more attractive. But even for these first properties, and like I mentioned, these were our first 2 properties that we put up, we give free transport to students. So if you look at the population at, for instance, Jogoo Road, you have students as far from Catholic University, you have students from Strathmore, you have students from various other colleges like Boma. And what we have realized is, because we are not just offering student accommodation, we're just not giving a place to sleep. What we do is we offer a community, we offer people a reason to believe. And because of that, you have people coming from the same area, same campuses, preferring to stay in certain properties. And we give students that flexibility, regardless of where you live, to prefer, or rather to choose what properties you would want to stay in. So they're very strategic properties, if you ask me.
Okay, all right. You'll answer that question and then you continue your presentation. You'll take the other questions. So Pauline is also asking, where would the 20% income go? I'm assuming all the costs have been settled by this time. I think it's in reference to the last slide you were presenting, because that's all she says. Where would the 20% income go? I'm assuming all the costs have been settled by this time. I don't know if it's clear.
Right. So REITs hold properties, and properties require maintenance over a period of time. Maintenance is considered to be a capital expenditure, and that is something that the REITs have to keep an eye on. And like I mentioned, the reason for that is you have to ensure that the property attractiveness remains at an all-time high, because that is what attracts people to your property. So that portion of a bit of that portion is used to ensure that the properties are maintained and you keep them in as high standards as possible.
Okay, perfect. You can continue the presentation. We'll take the other questions in a few.
Thank you very much for that. You can probably pose me at some point if you have many questions. I'm happy to cover those. So I was explaining about the opportunity that Akon saw when they started this journey. And the first one is obviously there's more than 400,000 students who come to Nairobi for university and college, for university and college education. So if you look at that number, and this was 2017, right now that number, if you look at the number of candidates graduating KCSE every year, is touching 500,000. So if you look at this number and you ask yourself, where are these people accommodated? Because there's only 39,000 beds in universities and colleges in Nairobi. So the answer is people are accommodated in informal settlements. They're accommodated next to universities. If you think about Nairobi West, that whole area, Langata, you think about Rongai, because of the universities around that. If you think about the area around TRM, Githurai, that whole place, you have a lot of students living in those areas. And are those places ideal for student accommodation? You can argue, but the point is parents who also want to see their children stay in a place where they're able to deliver on their mandate, that of achieving an education. They want safety and security for their students. And therefore, there's a huge opportunity we realize there's a huge opportunity for student accommodation. So that's a market gap that Akon saw. And 2017 opened the first student purpose-built accommodation unit on Jogoo Road. So by 2020, we'd managed to build and operate 5 Kwetu student residences over a 3-year period, while maintaining an average occupancy rate of 90%. So this is very important, because what happens when you test a thesis, an investment thesis, when you go out and invest in something, the result is what tells you if there's real opportunity. So there has been a very high demand right from get-go in 2017. And even as we've continued building and through the lessons we picked, we continue to see more demand. Right, in 2021, we launched the first pure development REIT issued globally. So the first student accommodation REITs in Africa, and the first issuances to list on USP at Nairobi Securities Exchange. So this is the Akon Development REIT and the Akon Income REIT. So looking forward, what are we doing? I've mentioned that we are currently developing 2 properties under the Kejani brand. This is more of an affordable brand. We are rolling out Palma, which is going to target young professionals. So after Kwetu and Kejani, where do you go to? Do you still, when you start on your first job, where are you going to stay? So we are going to look at Palma. So by 2023, we plan to have built our other 2 purpose-built student accommodation housing brands, so Kejani and Palma. And we've started on Palma. We bought a property and we started the development of that. So by 2030, so if you allow me, I'll probably also mute everybody, because I can still hear some people in the background. So by 2030, the goal is to have provided at least 40,000 new purpose-built housing beds across the 3 brands, that is Kwetu Student Residences, Kejani and Palma. And therefore, the need for us to go to the capital markets and not just raise capital, but also give retail investors an opportunity to invest in a brand which is growing and a brand which is attractive in the market. So I like talking about real people when I talk about investments. And let's meet Jennifer, Lucy, and Mark. And I just like us to look at the profiles of these 3 people, because it touches on us. So Jennifer is 26 years old, a marketer, salary of 70K to 150K a month, adventurers, wants to explore the world, try out new things. she's a foodie and all that. So Jennifer is ambitiously looking for a place to invest her money and earn stable returns. So at this point, we'll want to figure out, what do they look for when they look for an investment? What does this age group look for? Then we look at Lucy, who's 35 years old, has a son. She's a banker, earns just about 200 to 350K. She's young, energetic, has a young family, and the passion for finance and investment. So Lucy wants to start saving for her young son's education. And then finally, Mark.
Sorry, there's a participant by the name Jerry Campbell. Kindly mute yourself. It's very distracting. Jerry Campbell, please mute yourself. Okay, go on, Donald. I hope that's sorted.
Right, thank you. Then you have Mark, who's 48 years old. So Mark is a construction manager on a salary of 350K to 500K. So Mark is passionate about keeping fit, maintaining a relationship with his 3 teenage children. So Mark dreams about saving early for his retirement. So if you look at these 3 personas, they all look for different things. They all have different fears. They have different expectations when you talk about an investment. So what do they look for in an investment? So for Jennifer, she says, I tend to lean towards investments that offer me maximum returns in the long run. So at this point, you'll see that what really attracts them to an investment is maximum returns in the long run. So I'm pretty young, so a product that is easy to understand and use is a plus. So when you look at when you look at Lucy, so Lucy is looking to invest. And she's looking to invest, she's always asking, in case of a family emergency, can I access my funds easily? And this is a question I get from a lot of investors when I go on roadshows. Will I be penalized for accessing my funds that are mine in the first place? And what does that mean for my investment? Can I come back and continue? Can I invest in small bits, stop, and continue? Must I make a constant amount every month? Those are things that somebody in that age group will think about. So for Mark is 48. Remember I mentioned he's 48. He has 3 kids who are teenagers, and he's thinking about retirement. And the reason is he's going to turn 60 in 12 years' time. So he has to start thinking about those things right now. So retirement is a great deal for me. So I'll always consider an investment vehicle that is safe and secure and assures me of a comfortable retirement. We mentioned about some of the benefits of REITs, and one of the ones I did not mention is that REITs are regulated by Capital Markets Authority. And that is very, very important. The difference between indirect real estate investments and direct real estate investments is that a direct real estate investment, for instance, when you're buying an off-plan, a house off-plan, you give the money to the person who's literally doing the project, okay? In this case, this is a regulated investment. So as much as the money winds up doing projects in the REIT, then the regulator puts in place checks and balances to ensure the investors' funds are protected, is safe and secure for the long term. So a few numbers I like throwing to investors is that, did you know that 1 trillion in capital started up in land in Nairobi alone? And if you look at the neighboring areas, so Kajiado, Machakos, Kiambu, there's 12 trillion in capital tied up in those areas. And why is that the case? It's because we are quite, conditioned. We love real estate. We all grow up, hoping to make some money one day, buy a house or buy real estate and rent out. So it's something that we grow up wanting to do. Okay, before somebody gets married, they're told, you need to ensure you bought a plot of land. Okay, when you make some money or you've grown up, you've gotten some promotion, your mom will tell you, ensure you buy some plot of land. So we've grown up with love for real estate. So every Kenyan loves real estate. The question is usually, how do you then make that real estate work for you? If you went and bought a plot for 100,000 shillings and you kept it for 10 years, what is the opportunity cost, okay, for waiting for that capital gain? What sort of return would you have gotten elsewhere, say if you invested that 100,000 shillings in real estate, which is already income generating? So every investor seeks a real estate investment that is profit making. However, that option is not available because real estate options require time to build, rent, meaning that you have to get occupancy on board and get the right level of rent and then generate profit. So the Kenyan regulatory environment enables investors to earn from income generating properties through real estate investment trusts or the REITs. And this framework allows income generating assets to be professionally managed under a regulated framework. So this opportunity was only available to institutional investors, but is now open to retail investors like you. So I'd like to mention why that was the case. So if you look at REIT regulations, there's a requirement that an investor needs to invest at least 5 million shillings if you are to go directly into the USP or to Nairobi Securities Exchange. So that option means that you literally have to go to your stockbroker and then tell them, I'm interested in this or that REIT. And the requirement is that then you have to invest at least 5 million shillings of funds for you to be able to do that. So what is the solution for that? And I'll come to that. And how have we solved for that problem to ensure retail investors also are able to participate alongside institutional investors? So I'll define the solution, vuka. So what is vuka? So vuka is an exclusive invite-only investment club that allows investors like Jennifer, Lucy, Mark, and you to own units of Aecon student accommodation REITs. So through our digital platform, vuka connects individual investors to owning shares or units of profitable real estate affordably and conveniently. So in short, vuka ni chama ya real estate. So it's chama because it's invite only, it's exclusive investment club, and which raises funds or aggregates funds from many investors and invests in real estate. So what are some of the benefits of vuka? So the first thing is it's regulated. So this provides a mechanism and platform to translate savings into private sector investment through a CMA approved product. The tenor, so favorable terms under which the assets will be held, allowing investors to buy units for wealth accumulation in the medium term and long term. There's quality of assets. It's ideal for capital appreciation year on year. And I mentioned how quality the Kwetu student residences are in terms of attractiveness of a brand. Helps you to get committed to your own savings journey. So we all want to save. We all want to grow wealthy. We all want to invest. But that discipline is not there. So vuka helps you to get committed or get disciplined to your own journey, because then you're able to invest in small bite-sized chunks. You can stop when the pressure is too high or you have other needs that you need to get into, and then continue. You can also pull out your funds if you get an emergency, because again, it's listed in it's trading on the Nairobi Securities Exchange USP. So this helps you to be committed to that journey. It gives you flexibility. So in time of need, the ability to liquidate or ease of selling and withdrawing your savings compared to direct real estate. So you'll all agree, if you had a plot of land somewhere outside of Nairobi, that plot of land is valued, for instance, 500,000 shillings. And today you had an emergency and you need to settle, for instance, a medical bill in the next 1 week. It will be virtually impossible for you to sell that plot of land, get money, and be able to deal with that. But for REITs, all you need to do is sell your units on vuka platform. And those ones are presented, or rather sold on the Nairobi Securities Exchange USP, and you get your funds within 5 to 10 working days. So flexibility is very important. Again, another aspect of flexibility is that you can start investing from as little as 220 shillings, meaning that 10 units, and you're able to buy to get that into your investment. You can do it daily, monthly. You can stop if you have other needs. If you need to take your funds elsewhere, you can liquidate part of it or the whole of your investment. You can continue at a future time. So not very many investments give you that sort of avenue of flexibility without having conditions or penalties. So it's tech enabled, meaning that it's a user-friendly platform for those of us who have tried the vuka platform that allows members to buy, sell, and monitor their investment. So you clearly can see what value of investments you're holding, how much dividends you've earned in the last couple of months, and you're able to buy and sell on the platform, as opposed to calling your relationship manager or filling forms whenever you want to withdraw. So vuka is a Swahili word which means crossover, okay? And that crossing over is a big milestone for anyone who earns and wants to save a bit of their earnings for a better future. So let's look at some of options for some of the people we mentioned. So if you look at Jennifer's projected investment growth with vuka, we mentioned that Jennifer earns between 70 and 150K. We normally recommend that you invest just about 8 to 10% of your income, and this allows you to diversify into other securities or other investments, which give you not just short-term abilities, but also allow you to accumulate wealth in the medium term to long term. So if she did 8 to 10% of her salary, that means on the lower limit, she's doing just about 7,000 shillings per month in vuka. If she decided to invest for 20 years, and again, I'd like to clarify that vuka has no investment tenors. You can join in and leave at will whenever you want to leave. So if she decided to invest for 20 years, So that she can now confidently chase her financial ambitions. How would that picture look like? So the monthly investment will be 7,000. Her tenure is probably 20 years. So the total amount invested, and you can do that math over that period of time, would be 2.78 million. But the accumulated wealth at the end of that investment is 6.61 million shillings, meaning that at the end of 20 years, because Jennifer is 26 now, in 20 years means she'll be 46. At the end of 20 years, if she decided to hold on to her investments and just get a payout through dividends year after year, she would take out 654,000 shillings every year. If she decided to liquidate her investment, it means that she would take home a whooping 6.61 million shillings out of an initial investment of 2.78 million shillings. Let's look at Lucy's projected investment. So we mentioned that Lucy's lower income band is 200,000. So Lucy is slightly older, 35. If she decides to do just 8 to 10%, which we normally recommend, is that she will invest 21,000 shillings per month in VUCA. So if she does that for 15 years, upon which her son will be ready to get into campus, because Lucy is trying to ensure that by the time the son is ready to get into campus, that Lucy can take her son to whatever university she wants to take her son to. So she decides to do probably 15 years. So the total amount invested will be 5.4 million shillings, but the wealth accumulated at the end of that period will be 10.67 million shillings. And if she decides to draw the entire amount or sell the units and take the son to university, she would take out 10.67 million shillings. But if she decided, listen, I'm going to hold in there and take out dividends every year, at this level, she would take out a dividend of 1.1 million shillings, just about 1,079,000 shillings every year. So if you look at Mark's projected investment growth with VUCA, Mark's lower limit income band is 350K. If he does 8 to 10% of that, he would do a monthly investment of 35,000 shillings. Because Mark is nearing retirement, if he invested for 10 years, the total amount invested or saved will be 5.28 million shillings. But the wealth accumulated at the end of that tenure is 8.32 million shillings. So if he decided to take out, sell his unit and exit his position, he'll go out with 8.3 million shillings. But if he decided to hold it and continue enjoying dividends year after year, it means that on retirement, Mark would be taking out 869,000 of passive income every year. So again, I like showing investors what the projected investor return, because we mentioned what the return was, what the outcome of last year was. For those people who are listening to me as I was making the presentation, remember, I said the total return which was paid which was achieved in 2021 was a total return of 9.4%, 4% being capital gains, and 5.4% being dividend yield. So if you look at the projection, and we normally pitch for 10, when we're speaking to investors, we tell investors this is a medium to long-term investments. And the reason is, like I said, real estate, it takes a huge chunk of capital to build and operate. So the first 2-3 years, the return profile starts growing the second, third year. So, but even when you look at the first year, we had projected in 2021 a return of 3.7% dividend payout and 1.5% capital gain, meaning a return profile of 5.2%. We exceeded that, but by showing a return of 9.4%, which is more than 4.2% ahead of budget. So the return profile for VUCA is 11% of a 10-year investment horizon, and that is made up of 7% dividend payout or dividend yield and 4% capital gain year on year. So assuming 100,000% is invested and over a 10-year period of time, and the investor invested in 2021. If you look at, say, at the end of 10 years, the investor value of units will be 234,000 shillings after having invested a one-off of 100,000. This is when the dividend is reinvested. So the net dividend reinvested will be 64,000 shillings. This is on the right of your screen. And the unrealized capital gain is 70,000 shillings, meaning that if this investor was to exit at this point, they would make the difference of the 234,000 and the 100,000. Assuming that somebody else did a one-off of 100,000, but they do not reinvest the dividend that they get every year. So if you look at the right side of my screen, you'll see the unrealized capital gain will be 54,000. Whatever net dividend will be paid over that period of time will be 50,196. meaning the value of units at the end of that period of time will be 154,500. So what makes VUCA stand out? I like comparing VUCA.
Donald.
Yes.
Donald.
Yes.
Agatha here. Sorry, there's go back to your previous slide. There's one question I would like you to answer, then the rest will address. Pauline asked, how did you arrive at the amount invested? That math is not adding up. Example for Mark. Okay, maybe it's example for Mark, 35,000 multiplied by 12 months, multiplied by 10 years is different from what is on the slide, and for the other two personas. Or what am I doing wrongly? I don't know. Pauline, would you be able to unmute yourself? And Donald, you've understood the question.
Right, I've understood the question. Okay, I've understood the question. Perfect. So yeah, sorry, what I probably didn't go into the detail of how we've arrived at this. So if you look at the bottom of the screen, okay, so there's an assumption. One is that Mark is reinvesting, okay, the dividends paid out, and two, Mark increases because the income grows year on year. That Mark does a 5% increment for amount invested year on year. I don't know if that is clear.
Okay.
So I'd like to take you to the assumption.
Yes, Pauline has said, Pauline has said now that it makes sense, so she's fine.
Okay. So these are the assumptions at the bottom, that the investor is reinvesting the dividends paid out every year, and that the investor is going to increase the amount invested by 5% every year. Okay, and this is something we show out rightly. But we also normally share a calculator so that people are able to play around with the figures for their own plan when they're looking to invest. And the calculator.
Okay, I'm happy that you have a calculator.
We have a calculator which I can share with you and also the team here. If for someone looking to figure out exactly how much they'll be making in the next 2 years, 3 years, or 5 years, or 10 years.
Okay, so Donald, you can go back to where you were. Do you want to continue, or do you want to ask?
Sure, we can ask. I can address a few questions. I can address a few questions, and then in the next few minutes, I'll finish and then take all the other questions. Yes. Yes.
Good. Okay. All right. So let's do 5. 1 from Kevin. Yes. What is the minimum one can invest?
Right. That is 220 shillings or 10 units of the Econ income REITs. And each unit is priced as 20.88 shillings currently.
Perfect. Next, what is the percentage of distribution for the D REITs?
So the D REITs have not paid any dividends, and I explained the reason for that. A real estate project like building one Kwetu takes averagely 3 to 4 years. Okay, so once you raise capital in the market, during that period when you're building or developing, there is no dividends that are made to development REIT, investors. And I explained that a development REIT only pays dividends out of a sale. So the only exit is once the building is sold. And if you look at the projections for development REITs, is that 3 years there's only capital gains. And I explained, if you look at our results, why there was a huge swing in terms of the NAV per unit, or the unit price for the development REIT, is because despite having made profit, that profit is not paid out. It's plowed back into the development REIT to continue developing the properties which are there in the development REIT. I don't know if that clears it.
Question. Yes, you plow back the money into the investment for the D REIT.
So that is for development. Yes.
Yes, and again, I thought that D REIT is only open to institutional investors.
Institutional investors, yes, and that's why if you look at institutional investors like pension funds, these are investors who are looking to invest in the long term. So the first 3 years, they're not looking at dividends for the first 3 years. They're looking at dividends in the long term once the properties are completely developed and sold either to the income REIT or to other people, right?
Okay, so basically for everyone in the call, we are supposed to mostly focus on the I REIT because that is the one that is open, on the income REIT, because that is one that is open to us as retail investors. The D REIT is for institutional investors. And so even like going forward, I think I'll focus, because the questions are very many, I'll mostly focus on the I REIT questions so that we have a lot of value from this conversation. Cool. How often are the dividends dispersed for the I REITs?
So the dividends are paid twice a year after each audit. So after the interim audit. So we just finished the interim audit. So the first dividend for this year will be paid by 30th of August. And then the second dividend is paid after the conclusion of the final audited results. So, and the final audited results usually are done before March of every year. So for 2021, the audited results were announced on 31st March. So the dividend was paid 30 days after. So by April 30th. So the dividends are paid twice a year.
Okay, all right. Rosemary asks, I think to better understand distribution of dividends, Donald could explain with an example of an investment and the fees deducted and distribution of dividends in probably 3 years for the IRIGHT. I think you had us. That's what you were explaining. So she says, I've understood that the DREIT is not available for dividend distribution within the 3 years. Yes. I think you already had 3 proper examples, right?
Right, yes. So that covers it, yes.
Okay. All right. So this is a very important question from Alfred. As the buildings age over time, service charge is definitely bound to increase. Likewise, does that affect the net rental income, and or how is the REIT investor insured against that?
So the first thing is for when you're doing commercial rental properties, maintenance of a building is quite important. Okay, and that is what that is what determines, one, that the valuation of a building is growing over time, and also determines the attractiveness of that property, that you can actually get people wanting to rent in that property. So there's also the question of location. Okay, where you put up your properties. In our case, since we're doing student accommodation, we have, with time, favored putting a property right next to the university, so that, one, it's easily accessible, and two, the brand is easily visible to students who go to those universities. Now, over a period of time, like he has rightly said, there's maintenance issues. You'll require to replace beds. You'll require to do a fresh coat of paint, and you'll require to do to change the floors and so on and so forth. So part of what the REIT does is to ensure that every year there's maintenance done to this building. So periodic planned maintenance on a monthly basis. There's long-term periodic maintenance which is done, say, on an annual basis, on whatever solar panels you have, on whatever various electronics you have in the building, on the building itself, look and feel. The importance of that is to ensure that the property does not diminish in value and the property remains attractive. So that is one of the reasons why a property under an income REIT has to be managed professionally, to ensure that it's not aging, it's not losing value, and it's part of the costs which are normally put aside from the income that comes into the REIT, to ensure that the properties keep their value. So it's part of the 20% we spoke about, why the law anticipates that you can pay up to 80%. In fact, if you look at the income REIT last year, we paid 93%. We paid up to 93% of whatever taxable ordinary income that came into the REIT. And the reason is the properties are relatively new, so you do not need to provide or put aside so much amount of money to cover that cost. I don't know if that has answered the question. Yes. Yeah,
it has. And maybe, is it true that you as the IRIGHT managers are allowed to dispose the property if it's a point it's too old, or at some point it's no longer an income generating property? Is that also part of the answer?
So the income, yes, the REIT can make a decision, not just the property manager, because remember, by the time you put a property in a REIT, you lose control of the ownership. You literally, and that's why the property cannot have debt, because you have to give the titles and the ownership documents to the trustee. So should a property age, it doesn't make sense. The REIT can actually choose to sell that property and then plow that money back into the REIT for consideration, for future consideration, to either buy a more income, a better returning property, or a property which is modern. So that is a decision which can be made by the REIT, or in the normal manner. Yes.
Okay, so you'll answer one last question and then you finish your presentation. How affordable are the student residences, given that returns are highly dependent on occupancy levels?
Right. So you see, rental consideration are usually a factor of demand and supply. Okay, I mentioned we were the first purpose-built student accommodation business in the country and by extension in sub-Saharan Africa. And what we experienced is an overwhelming demand for our properties. So I think if you look at currently our properties, the cheapest room is around 17,500, where students are sharing. So you can argue whether that is affordable or not affordable, but we have driven a lot of demand to ensure that that students are getting value for their money, but also we have a consistent demand at that rental price.
Okay, please finish your presentation.
Right. So I think I'd covered. I was covering the comparison between VUCA and the other investment options. So if you look at rental units, so they offer stable income, and there's quality of assets because it's your land. Okay, stable income because then you have people who are renting in those properties, and therefore they're paying you some rent. If you look at plots of land, because these ones are very popular, they're not affordable. It's not convenient to buy a plot of land. There's no tax incentives, but the quality of assets is there because you know that you own that piece of land. Okay, if you look at NSE equities, these are stocks of various companies. They're affordable, yes. It's convenient to buy because you just need to put an order with your stockbroker. There's tax incentives, okay? And do they offer stable income? I mean, it's arguable. They can pay dividends or not, okay? And they can pay dividends once a year, or twice a year. So that varies from one stock to another. But there's quality of assets if you buy into the right companies. Insurance investment products, okay, or life products. So they're affordable, yes. They're convenient. There's tax incentives, but they do not offer stable income. But the quality of assets is there because then you will recoup your money over long term. If you look at conventional money market fund, again, these are very good. They're attractive investments, especially for those people who are looking to invest in the short term. They're affordable. They are convenient. There's no tax incentives. You have to pay the 15% withholding tax on whatever return that you're promised. They offer stable income because interest is paid regularly, and there's quality of assets depending on what scheme you've invested in. So if you compare with VUCA, it's affordable. I mentioned that with just about 220 shillings, you're able to buy units or start on your investment journey. Convenient because you don't need to fill any paperwork. You onboard yourself on a platform, and you can invest as and whenever you want. You do not have to write to anyone or reach to anyone. Tax incentives, I mentioned that REITs are tax exempt, and I also mentioned that capital gain on REITs is not charged any taxes. I also mentioned that REITs are the most tax efficient investment vehicles because you only charge 5% withholding tax on the dividend payout. If you compare that with, say, money market fund, which charges 15%, you'll get to see when you, for instance, get a quote for a return profile of 10% on say.
All right, right. I'm on another Zoom call. Let me just mute.
Dennis.
Right.
Dennis, mute yourself. Mutuma.
Share your screen. Let me just.
Can you mute him?
Screen.
I'm trying to. You're using your Dennis?
Using your phone.
Oh my God, let me.
Okay. Sure.
Using your phone, you may not be able to see what you're doing. Anyway, let me do this. Let me log on to my portal. Then I can use my camera to show you what to do.
Right. So I think he's muted himself. Not yet. Dennis.
Yes, Don.
I think you should mute yourself. You've been talking the whole time. Yes. So you can continue. Thanks.
Sorry.
Okay.
Okay.
Right.
Let's continue.
Right. I mentioned that that VUCA is affordable, convenient in terms of the fact that you can get it on your platform, on your digital platform. The tax incentives, 5% withholding tax on only the dividend payout aspect. They offer stable income because dividends are paid twice a year, and there's quality of assets. These are real, actual buildings. You can see, you can touch. They have an evaluation. So the quality of assets is very high. So let's look at how do you join. So there's various ways of joining, especially when you want to start investing in econ REITs. The first one is if you're looking at development REITs and you're an institution, there's a minimum requirement of 5 million for you to invest in those REITs. And the same thing as income REITs, there's a minimum requirement of 5 million. So the normal way is that you go to your stockbroker and show your interest to invest in the income REITs, and they'll be able to get into the USP and then buy the units for you. If you're investing below 5 million shillings, that's a reason why we have the VUCA Investment Club in place, because VUCA Investment Club is the entity that aggregates all these investments which are below 5 million shillings and then goes directly to the USP on your behalf. And therefore, VUCA as an investment club has different categories for memberships. So you have individual memberships or investment clubs. So for individual memberships, we normally encourage people to start with silver, and meaning that for silver, you can invest up to 100,000 shillings. So anything from 200 shillings to all the way to 100,000 shillings per annum. And the joining and annual fees is just about 998 shillings. When trading in REITs, there's a service charge, and this is because there's trading charges when of our CMA approved broker. There's administrator and NSC charges applicable during trading on the USP platform. So the starting point for the majority of investors is usually silver. We normally encourage people to start small, start investing small, get a feel of the platform, experience, get the VUCA experience. Then with time, as you grow your investment profile, as you grow your portfolio, then you'll also grow your VUCA investment. So I think with that, I'll stop. I'll take any questions you may have. But before I do that, I'll encourage you, for those people who may be interested to onboard on VUCA, we have Dennis online. We also have Agatha, who's able to send you an invite link to join the club so that you start exploring it. You can also reach out to us. I put a toll-free number, or you can write to us through info@vuca.co.ke. But the starting point is the people I've mentioned. You can ask them questions. You can also ask me questions here, and I'll be able to answer them. Thank you very much. Agatha, I'll take any questions that are pending at this point.
Okay, all right. So let's shoot. What are the requirements to invest in the REIT? I think you've already answered that. So
Right.
The question I want you to answer is, can a group or a chama invest?
Yes, a group or chama can invest. We have a category for chamas, which I mentioned previously. Right.
Okay, all right.
Yeah.
What risks are Kwetu and the rest facing, and what measures are you taking to mitigate them? Perhaps if the economy becomes tougher to live through, students will prefer. What if students prefer to move back home?
Right. We keep an eye on economic conditions, because I think, like the person asking the question rightly said, the biggest risk any business faces is political or economic instability. So we have continually. Yes. So if you look at our investment thesis, first of all, I explain what the demand in the market is, and the demand is 400,000 beds per annum. Okay, the supply of beds is just about 39,000. We set a target to ourselves that we are going to only look at touching at least 40,000 beds by year 2030. So if you look at that by today's numbers, and that by 2030, if you look at population of students, it will be just about 1.2 million shillings, 1.2 million people every year. So if you look at that percentage of the number of beds we are targeting versus the huge potential, rather looking at the growth in population, it means that we are addressing just a small part of the demand, and that one allows other players who may come into that market. Two, also allows us to play in a segment which is constantly growing, which is the young people.
Okay, all right. Thomas Mbadu, are you in this call? Thomas, can you hear me?
Yes, I am. I can hear you very, very well.
Please ask your question.
Okay, mine are a number of questions. I don't know whether you want to respond. Hi, Donald.
Hi.
It's good hearing from you, and the presentation was really, really good. Yeah, there's a lot. So I don't know. I have like about three or four questions that I wanted to ask. So I don't know whether I ask them and then you respond one by one, or you want me to?
You can ask one by one as I answer.
Perfect.
Yes.
Yes. Now, the first one is, I'm looking at the VUCA platform. Let me just start from the VUCA platform. I know at some point it started by being put on the CMA sandbox. That is for new innovations. It was meant to be there for 1 year. I don't know whether it is out. That is number one. And then number two, if it's out, will it cease to be an exclusive investment club and then admit more people, or what happens once it's out of the sandbox?
Right, thank you very much. So we're in the process of getting out of the sandbox, and the whole point of exclusivity is because the regulator requires that you qualify investors, okay? And by qualifying investors is one, on the basis of their income, and two, on how much you've educated investors. So when you're dealing with regulated investments, you cannot just reach out to the entire market, okay? And there's reasons for that. So, and that's why it will continue being an exclusive invite-only investment club. The other reason why that is the case is because REITs by their nature are not open-ended investments. So at some point,
this is my blanket. What are you putting down?
Oh, Catherine.
Yes.
Please mute yourself.
Right. So so with time, the units are they're not infinite, they're finite. So if you've issued, like in our case, 37.5 million units, at some point they'll be fully bought out. So you have to keep it exclusive. So that's a reason for exclusivity. And then regarding the sandbox, we are in the process of getting out of the sandbox now, because we got into the sandbox in August of last year. So we are going through that process. Yeah. Okay.
My second question, I'll be quick. I know when I buy units, because I already invest in VUCA. So when I buy units, I find the money or the entity I'm told to pay to is called Econ Capital Partners Limited. The LLP. Yes. And I don't see you mentioning it anywhere. And then of course. I looked a bit and I saw it was an entity that offers investment or brokerage services. Yes. And again, I don't see it licensed anywhere by the CMA on the investment like stockbroker or investment bank or anywhere. So just shed more light on where people pay their money to, because it's not part of the structure of the rates that you had illustrated.
Correct. Thank you very much for that good question. So the first one is Econ Capital Partners Limited is the incorporated entity of VUCA. Okay, it's an aggregating entity that is VUCA. So that is what was literally in the sandbox. VUCA is a brand. Is what because it's easy to remember. It's a Kiswahili brand. So that's what people know. But Econ Capital Partners is regulated under VUCA, okay? And I mentioned that we've been in the sandbox. And the reason why, when you invest in the income REITs through VUCA, the money will go to Econ Capital Partners Limited is because they're the ones who now, VUCA is the one that now aggregates all this capital, so that by the time we are making the order on the USP, you've hit the threshold of 5 million requirement. I don't know if that is clear. So the Econ Capital Partners Limited is VUCA in short.
Right. Okay, that is VUCA. Yeah, because I know, like when you're investing in the other, of course, I know this is a REIT. Yes. When you invest in unit trust, you send money to the asset manager. So I thought probably in this particular case, we'll be sending money to AIML as opposed to the Econ partners, because I thought the aggregating entity would be the IML. Or is there a route that it follows from Econ Capital, then it goes to IML, then it goes to the US?
So yes. So now, because that's why I said the aggregating entity VUCA aggregates capital, and then it's routed through IML. Who then? Because the final destination is the REIT itself. Okay, the REIT investment account. So unfortunately, you cannot, as an individual, go directly to the USP, or unless you're hitting that threshold. So the movement of money, once you aggregate, once Econ Capital Partners Limited has aggregated, is that IML then pushes this amount of, does these orders through the usual route, through the stockbrokers into the USP, because also IML cannot go directly to Nairobi Securities Exchange. Then orders the unit on behalf of the investors.
Okay, I've understood that point.
So if you are to invest, for instance, an amount which meets threshold, and you are to send that money. Ideally, you'll send it to the stockbroker, who in turn sends it to the REIT investment account. Yes.
Okay. I'd not understood that bit, but I think now it's clear. And I think my last question, before I let the others also ask, I understand. Of course, here in iRate, we have the ILAM Fahari iRate, which is traded now on the main side of the stock exchange. And then we have now your iRate, which is traded on the USP. Now, one of the things that I because I also invest in ILAM, you find, you look at their NAV, their net asset value is 19.58 that is for 2021. But then when you go now to the main market segment where it's trading at 7.18.
Right.
Now, yes, I understand. Of course, the purpose of that is for the price discovery, so that people can interchange and they know exactly this one is meant to be traded at 7.18. Now, I know on the USP side, the market is not as active. So in terms of price discovery, it's not as much, it's not as vibrant as the main market segment. So I see your units being priced at the NAV. Yes. So if let's say Fahari iRate was to be priced at the NAV, it will be probably the market will be buying and selling at 19.58, but now they are buying it, selling it at 7.18. Now, now my question is, how sure am I as an investor, for instance, that the market value, if it was in a let's say in the main market segment, it would actually go for 20.88 and maybe not at 10.32 or 4 point something. As in, what gives me that confidence that I'm actually, the asset value of this is the 20.8, having seen how the market interacts with ILAM, whose net asset is 19.58, and yet the buyers and sellers are doing it at 7.18. Could I be holding an asset that probably is worth less than what is being priced at?
Right. So now, when you talk about price, and thank you for that question. When you talk about price discovery, is obviously for other listeners is the price at which a security trades, and which is driven by forces of demand and supply, and not necessarily the value of the asset you're holding. So one of the key learnings we made while getting into the REITs market is globally, because then REITs are considered to be in the alternative segment. So the best route to take when you're getting to sort of list REITs is taking them through over the counter or USP. And the reason for this is you actually now allow investors to buy the asset at the exact net asset value per unit, okay? And also, then for them to benefit as you work on building credibility, as you work on building a track record, because previously, if you remember, once you got into the market in February 2021, assuming that we listed on the main board, the argument will be, on what basis are we judging this investment? On what basis would you be determining whether it's 5 or 10 shillings? That is usually a factor of a couple of things. One is your track record. So one of the things that putting your REITs on the USP allows is for you to build that track record, while assuring investors that there won't be swings determined by anything else, but apart from NAV growth over a period of time. So that is quite strategic. And if you look at many other REITs world over, they will normally list in the alternatives, incubate it, develop a track record before then you throw it out to the main segment. And that's the route we are following.
Okay, and if we throw it, just like the way ILAM went to that side. So assume we throw it, and there's the danger that actually the price discovery probably could settle at about 6. Then a person investing at 20.8, and then you go to the main market segment, and then you realize all of a sudden it's going to 6, because I think that's one of the predicament of ILAM. It went to 7.1, and then people are saying, like there are people who actually invested at 20. When it was being issued, and now it's going at 7.18. So of course there's a huge capital, loss at that point. So I don't know whether you foresee, if you jump the other side of the ocean and you go to the main market segment, I don't know whether you foresee, like the market could actually price it lower than what is priced at the moment, irrespective of the net asset value.
Right. So thank you for that question. So I'll not want to speak so much about the ILAM REIT, but I'll tell you, some of the factors that influence the pricing, even when you do a price discovery. The first one is the amount of income generated from get-go, okay? If you look at how we've structured the income REIT, we already have a development REIT, meaning that we are not going to the market or the open market to buy properties, okay? So if we are raising X amount of money, assuming we're raising 100,000 shillings, we already know that this property has been built and it is worth 100,000 shillings. We are not going to negotiate with people in the market. Secondly, by the time we are putting this property in the REIT, it has been stabilized, and the regulation requires at least 6 to 8 months of stabilization, meaning that it has been built, you have got an occupancy of at least 80% for 6 to 8 months, okay? So that brings me to the other factors. So one of the things that influence, or rather why people make a decision on the valuation of a particular REIT is how much income is generated. And you would want to ask yourself in the first year, how much income did the REIT you've just mentioned generate? So that influences how people view a REIT, okay? How much income is generated? So, and that's why when we rolled out our REITs, it was clear that we will require a development REIT for institutional investors who have the wherewithal and the muscle to invest over the long term. And then, and also that means that by the time we are touching a property in the income REIT, then it's a property which is completed, it's income generating. Okay, we are not going to the market to look for a property. Okay, so you can compare in the two REITs on what happens. The other thing is the attractiveness of a segment. Okay. I mentioned what opportunity we are looking at, that there's 500,000 kids turning 18 every year, 400,000 of them, they come to Nairobi, the demand gap and all that stuff. Now, if you look at the real estate, sector, there's various segments. There's commercial property, isn't it? There's people who are doing residential. There's people who are doing, warehouses. There are people who are doing, even storage, storage areas. So each of those asset classes has a different attractiveness, different risks, so to put. So if you look at, for instance, commercial properties, what happened after COVID? Companies were giving up entire floors. Okay.
Yeah.
Yes. In terms of pricing, rental pricing, when you're negotiating in terms of rent with corporates, there's bound to be margin compression because you're negotiating with an entity that is looking to take an entire floor, 2 floors of your property. And the implication of that is every time a commercial entity leaves your property, they're leaving 1 or 2 floors. They're not leaving 1 room. So one of the things we did was we looked at the segment we're getting into purpose-built student accommodation. A typical building has 1,000 beds. So if 2 or 10, 10 students left the property, the occupancy is still at 99%. Okay, so you need at least 100. If you have 1,000 beds, you need at least 100 students to leave that property. Second thing is, for those people who've touched real estate in general, something called a plot ratio. How much you can get out of a space, a similar space. If you look at residential, for instance, and assuming I had a property in Kileleshwa, and this property is 2-bedroomed, it means that it has a living room, a kitchen, a washroom area. Those are already 3 rooms, and 2 bedrooms. Those are 5 rooms. If you look at student accommodation, those are 5 rooms, and you have 10 people, isn't it, in the same space? So if for an apartment that would take the similar plinth area, for instance, in Kileleshwa, you're probably getting a rent of 50, 60. But in my case, I'm able to show more than 3 times of that amount, because everybody asks us, how do you make this money? It's because the particular asset class, purpose-built student accommodation, does not require that much of space. So we are able to get much more for the same amount of investment. And 2, the risks that we talked about, occupancy. And occupancy touches on income generated, because even when you do price discovery, the factors that influence people's decisions on what you bid for is what is the risk that future income is going to come down, and how stable is the income? Okay, and then how attractive is that investment? So we have seen a very huge attractiveness, and that's why we continue to put up properties. I've mentioned to you that now we have 7 operational properties. We're bound to do 4 more by the end of this year to just increase our bed capacity. I don't know if this answers the question.
Yes, I think that one answers to a much larger extent. And then before I let you go completely, the buying and selling of units through VUCA. Why does it take a whole month for an order to be fulfilled? either when I'm buying or when I'm selling? Is this because we don't have enough people on the platform who can take up, just like in an active market, or is it a structural problem that probably VUCA is addressing?
Right. Thank you very much.
Sorry, Donald. Before we continue, we seem to have a problem. A person in this meeting called Purity M, and she's taking people's emails, people who are leaving their emails in this call, and I think she's directly inviting them to join VUCA, which is not right because she's not the host of this email and she does not work for Acorn. So Purity, so I think Donald and Dennis, it's important for you to take charge of that, because that is collecting people's data, and it is very, very wrong to collect people's data when they have not given you permission to. So her name, I can see it's Purity M. So she keeps taking people's emails and telling people, check your emails for those who have shared their emails. It's very wrong. Kindly, Purity.
Right. Thanks for
VUCA, Agatha and the team, I'm in VUCA, and I know the benefits from VUCA. And also, it is sharing of information that's helping also VUCA at the same time. So I'm not inappropriately correcting information. I'm using the information that VUCA is sharing because I'm also in VUCA. I've been there for 8 months now, and I'm receiving benefits from VUCA.
Yeah, but you cannot take people's emails in this meeting and invite them. It's Donald's responsibility and Dennis's responsibility because they are part of the Acorn team.
Okay, thanks for that.
Okay, let's continue.
Right.
Yes.
All right, Tom.
Okay, yes. Continue, Donald.
Yes, so I think you had one last question, Thomas.
Yes.
Thomas?
Yeah. My last question was on the buying. Yes, was on the buying and selling of units through the VUCA platform. I understand it takes a month, or rather, if you, depending at what point in the month, but it's normally fulfilled at the end of the month or early, in the next month. I don't know why the buying and selling should be that way. Is it because you don't have enough people to take up units like in an active market, or is it a structural problem that VUCA is addressing?
Thank you very much. I think it's a bit of both. I mentioned that we are building demand in the market. VUCA is a relatively new concept. It's just 1 year now. And if you look at the regulations, the thresholds we have to touch is at least 5 million shillings of trades from, aggregated trades from members. So when we went to the regulator, we agreed that we're going to start with, 1 trading day in the month, meaning that in the whole month, we are sort of aggregating capital, then going to USP at the end of the month. And that is something that we're going to change as we continue to grow, as we continue to see more demand or issue more primary trades.
Okay. I think then that answers my last question. So thank you so much for the presentation. I truly appreciate it.
Thank you very much, Thomas.
All right. Okay, thank you, Thomas. You asked very important questions for all of us. So Donald, we are going to, so we still have a lot of people in the meeting. Clearly people we still have 96 participants. So clearly people are interested to invest in VUCA. So I'm going to run through the questions that are still pending. People are asking if the recording is going to be shared. Yes, we are recording this meeting and you're going to share it in your email. So don't worry in case you missed anything. So the emails are so many people, a lot of people are interested in this opportunity. So we will do what needs to be done to get you onboarded on VUCA as soon as this meeting is over. So somebody is asking what happens after the 37.5 million units are sold. I don't know if that question is clear.
Thank you. I think it's clear. So we shall, every time we bring a new property in the REITs, we will continue to issue more units, and there's a process around it where we go to the regulator. There's a whole valuation before we determine how many units we are issuing at the prevailing rate. So yes, it's true that the units issued in the income REITs are finite, but we will continue issuing more units as we go along. And every time we put a new property in the REITs, then we have to issue new units. So like in this case, we have put our Parklands property in the REITs. So you'll see that there has been some activity in the primary market.
Okay. All right. The VUCA portal doesn't recognize any other numbers besides the Kenyan number. Kindly advise. So probably this someone joining from abroad.
Thank you very much for that question. We've gotten a lot of feedback, especially from Kenyans in diaspora. We are in the process of adding, international prefixes. When we rolled out, and like Thomas mentioned, we rolled out in the sandbox with an intention to, first of all, pilot the idea in Kenya, but it has since grown beyond Kenya, and we now have included prefixes from the US. We're in the process of sorting out UK, Dubai, and Middle East in the next few weeks. By September. So that's a challenge we've had, but that's because we started by piloting with Kenya. But now the people who are in the US, you're able to use your prefixes there, and in the next 2 weeks, UK, Dubai, Japan, China, in those places, you'll be able to then onboard yourself from using a number from those countries.
Okay, cool. Hi, Agatha. I was once invited via email to join VUCA platform by John Asio, a direct sales executive. I was not sure of his credentials and would like to know how one can ascertain such information now that Donald has made the presentation today. And I think I may have missed the introduction part of the webinar. If Donald's other team members are also on the call. So can anybody just invite anybody, Donald?
Right. No. Well, there are many ways of joining VUCA Investment Club, and we have different channels. So we have the digital channel, meaning that you can go online to the platform, and once you fill the form, give your details, someone from our contact center or digital team then will reach out to you and send an invite. But we also have a few other channels. That includes a direct sales channel. So we have a team of direct sales people who speak to potential investors and then in turn send them an invite link. But so that is the second channel. So the third channel is referral from customers. I'm sure for those people who are consuming who are investors on VUCA, are able to invite their friends because you have a link to invite your friends. We also have institutions which also sort of refer clients independently. But for all these people, the common thing is that you will receive an invite from VUCA, a VUCA email, and that email is what contains the link, the invite link, which you click on and start self-onboarding.
Okay. Is there a difference or advantage to buying REITs through VUCA as opposed to buying through one stockbroker?
Right.
Well,
so
you can't buy. Okay.
Yeah. So the only difference is that. Yeah, thank you. I think we clarified that you will not be able to buy income REITs through your stockbroker if you're investing less than 5 million. So the whole point of having VUCA is to encourage or enable those people who are investing anything from 200 shillings to 5 million shillings to then get exposure into income REITs.
Okay. Is the service charge a one-off payment or annual?
So the service charge is only incurred when you're trading. This is when you're either buying units or selling units. However, there's for the investment club, there's a joining fee and an annual fee. For the silver category, which is where we encourage most of investors to start from, that is an amount of $499. So that for joining fees and $499 for annual fees. So that is 998 shillings.
Okay. The tax rate for VUCA dividends is 5%. Is there also a withholding tax on the retained principal amount at the regular rate of 15%? Is the principal also taxed?
No, and I explained that REITs are tax-exempt vehicles. The only taxes charged on REITs is 5% withholding tax on the dividend paid out.
Okay. Is it possible for a student who is a foreigner to invest in VUCA, somebody who's not Kenyan?
Yes, it's possible. What we require is an alien card and a KRA PIN. So that's a requirement. And so we also have several foreigners who've invested on VUCA.
Okay. And somebody is asking, I think he saw that the service charge for diamond is the same as silver. Is that true?
So that service charge is 3% across all categories, and I think that needs to be separated from the annual fees and the joining fees. So diamond for the diamond segment, there's a different charge in terms of annual and joining fees, but it's true that service charge is 3% across all segments, and this is because it's based on the amount that you're investing.
And why do you have so many categories?
Well,
Why do
so
you have
now,
the different categories?
thank you. So now you do realize if you look at your money market fund, you pay something called a management fee. We do not charge that since we are an investment club. So we have different categories to allow different investors of different strengths to come into the club, but also to participate in meeting the primary club cost, which is basically the platform and the trading, depending on how much you're investing. So for instance, silver, which is what we normally encourage people to start with, if you're looking to invest anything between 200 shillings and 100,000 shillings, well, you pay a consolidated amount, an annual fee and joining fee of 1,000 shillings, so 998 shillings. So that allows you to buy units and to invest up to 100,000 shillings. So for the next category, which is, for instance, gold, which allows investors to invest up to 200,000 shillings, charges you a joining fee of 1,499 and an annual fee of 799. That is just roughly 2,300. So if you look at diamond, the joining fee is 4,499 and the annual fee is 3,499. So if you look at the total amount charged, it's just about 8,000 shillings. So it differs depending on how much you're investing. But for somebody who's invested in diamond, is investing up to 2 million shillings.
Okay, all right. Are you planning to venture into other towns like Kisumu or other countries like Rwanda or Uganda?
Yes, so we started in Nairobi because that's where the biggest opportunity is, but we are currently studying Eldoret, we're currently studying Nakuru, Nyeri, and all the major towns in Kenya, with a view to one, having Kwetu student residences in those towns. And we're also looking at the larger East African market, in particular Uganda. We are talking to Makerere. There's a lot of demand for purpose-built student accommodation across Africa, but they say charity begins at home. So we started in Nairobi because this is where the bigger demand is. However, for vuka is available across the country, regardless of where you are. You can onboard yourself on vuka. You can buy and trade in the units, or buy and trade in the units of Kwetu student residences, REITs.
Okay, Donald, do you have a simpler way of explaining what the NSE USP is? It seems there are a lot of people who don't get what that is. NSE USP, what is that in layman's language?
Thank you very much. So you can trade your securities or investments in Nairobi Securities Exchange through different ways. One is where you list in the main board. This is for listed companies, for instance, where companies like Safaricom, EABL, and even the Ilam IREIT is listed, and that means that in terms of the activity is extremely high in the main board, and the buying and selling takes place every day. However, for alternative investments, and this is an initiative by Nairobi Securities Exchange, for alternative investments, especially for unquoted companies, they are able to sort of, I don't want to use the word list, but they're able to trade, avail their securities and get them traded on Nairobi Securities Exchange through a platform called the Unquoted Stock Platform. The Unquoted Stock Platform is an IT platform that stockbrokers can get into and buy and sell alternative investments of companies which are not quoted in the main board. So it's pretty much a platform which allows investors to buy and sell their investments on the Nairobi Securities Exchange.
Okay, all right. Because it is 9 p.m., I will beg that we end the meeting here. I will beg that we end the meeting. Yeah, there's so many questions. What I can promise is that I have taken note of all these questions, and I will answer all these questions either via a video on YouTube or either through the blog or through the emails, because I have your emails. Unless there is a very, very burning question, but at 9 p.m. I would beg to end the meeting. But this one question about how does one buy and sell units? It's through the vuka platform, and you will be invited, Fiona. Unless Donald, you can identify a very burning question, because we've been here for 2 hours. Yes.
Right.
I think Agatha,
we can answer. Yes.
We can answer
Yes,
the last
you-
question by Nikita.
Okay.
She's asking, is the principal amount invested secure or there's a risk of depreciation? Probably Don, you can handle that.
Right. So one of the benefits I mentioned of our REITs is capital protection, meaning that once you invest in REITs, you are literally investing in actual properties which have a value. Okay, they have a valuation, and they're also attractive, and their income generated. So that value grows over time. So there's no risk that the same amount is going to depreciate. And the other option is the other thing I need to mention is I mentioned the reason why we are listed on the USP is to allow investors to be able to sell and buy the units easily, but without affecting the net asset value or the unit price. So there's I would confidently say that there's no risk that you're going to lose your principal or your principal is going to depreciate.
All right. So I am sorry, I will beg to end the meeting here due to time. I've taken note of all the questions. Thank you so much, Donald, for joining this meeting. Thank you for the beautiful presentation. Thank you, everyone. At some point, we even had like 128 people join the meeting, and I'm very, very sorry for the technical issues that we were experiencing. Next time, I will make sure it will never happen again. And for the people who've shared their emails, we promise that by the time we upload this recording on YouTube, your personal details at your emails will not be viewable. So we don't joke about your data. We don't distribute your data elsewhere. It will only be used to join the VUCA platform. Nothing more, nothing less. So yes, we will do the due diligence because we are responsible for your data. Thank you so much. Thank you for joining. I beg to end the meeting here. Please leave at your own pleasure. If you have an emergency question, please leave it and I will make sure to email it to you. Thank you. I'll email you all the answers. Thank you.
Thank you very much, Agatha.
All right, we can all end the meeting. Donald, you're the host. You can stop the recording kindly.
Okay.